What's up everyone, it's Cali with MoneyVest. So in this video, I wanted to break down the inflation numbers that just came out. So PPI numbers came out earlier today and CPI came out yesterday, and we also got the retail sales numbers. In this video, I want you guys to simply focus on two things. Number one, healthcare insurance, and number two, energy prices. That's where our focus is going to be, because that is the driving factor behind core inflation, which is affecting the acceleration in overall inflation once again, whether directly or indirectly. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining, getting access to all the buy and sell alerts, options alerts, trade ideas. I did open up a couple more spots here, so links are going to be down below and we'd love to have you on board. So first things first, I want to break down how does the PCE weigh items compared to the CPI. So as we know, the personal consumption expenditure, the PCE, is the Fed's preferred measure of inflation. The CPI is basically what we look at as consumers, is what the market looks at. But this is basically what the Federal Reserve focuses on when it comes to the personal consumption expenditure, right? They're basically guiding their interest rate policy on the back of a PCE, and more specifically the core inflation, which is core PCE when you exclude for both food and energy, because food and energy tends to be a little bit more volatile compared to other components within the basket. So majority of it, of course, coming from shelter. And again, these weightings are subject to change. It's been between 35 to 40%, 33% in some other years, but majority of it is coming from housing, right, which is included in shelter prices, or in other words, rents. The next big one is going to be transportation. Right, this is your transportation expense, airline fares, all those things. That's, airline fares, which were up 4% in the previous month as we got the CPI numbers yesterday, also play a big role in overall inflation. The next big one is going to be food and beverages. Then we've got 8.8% in medical care. Other goods and services also 12.7%, and 5.8% is going to be recreation. Now, here's where things get interesting, right? The PCE gives a little bit of a different weighting to different components. 22.6% for housing. The next big one is going to be 22.3%. Actually, the biggest one's 23.1%, other goods and services. But the third biggest one is medical care. And I'll go over the health insurance. And I basically was looking at other reports and was looking at the inflation PDF. And there was a 33.6% decline in health insurance on a year-over-year basis. And then I went on to Twitter. A couple of people mentioned that. So I started digging in more. And that's because of a very specific reason that I want to touch on in this video, and that once it starts to get recalculated and the adjustments go away, well, it's going to be a bit of a problem. That's exactly why I mentioned earlier in the video, we're going to be focusing on two things: healthcare insurance and energy prices. So now that we know that this is the composition, right? Housing, food and beverages, transportation, medical care, recreation. This is core inflation. So this is core CPI as of December 2022. Transportation's 17.6%. So you will not find energy or food in this. Food and beverages, again, a little bit differently calculated, 14.6%. We got medical care, 7.1%. We got personal care, 4.5%, recreation, 4.4%, and apparel is going to be 4.2%. As well. And then, of course, household furnishing operations, 3.9%, education communication, 3.8%, and other goods and services at 15.1% as well. So this is where we ended up, right? This is the CPI from yesterday. 0.6% was the actual number versus month over month, and year over year, it's 3.7%, so accelerated a little bit further higher compared to 3.6%. And on a month over month basis, core came in at 0.3%, so a little bit hotter than what the expectations were. And on a year-over-year basis, it's now at 4.3% compared to the 4.3%, so came in line with the consensus. And of course, significantly lower than the prior month. Now, PPI came in earlier today, so 0.7% increase on the month-over-month basis compared to 0.4%. Year-over-year came in at 1.6%, hotter than what the expectations were at 1.3%. Core PPI in line 0.2%, and core PPI year over year 2.2%, a little bit lower than the consensus. And ex food, energy, and trade services 0.3%, and a little bit hotter at 3% year over year compared to the consensus as well. So, and very quickly, retail sales 0.6%, so very strong retail sales. Ex vehicles 0.6%, ex vehicle gas 0.2%, a little bit lower, actually higher than the consensus on both ex vehicles and gas. and of course overall month over month. So this was a hotter print, so that goes to show that again consumers are spending, retail sales continue to be very strong. One more thing that I want to point out before we get into health insurance and energy is the bespoke investment analysis pretty much put together this chart that goes over the S&P 500's performance on CPI PPI days, and it's been green for the most part. It has been green most of this year, but if you compare this to performance 1 week after the CPI numbers come out, it has been red. It's been mostly red most of 2021, 2022. So again, this week could be green. We saw green yesterday, I think a little bit. Today we are slightly pushing higher. The market's open about 20 minutes ago. And 1 week after, so maybe next week, there is going to be potentially some downside that we need to be cautious of. So now going over to healthcare insurance, right? So anyone see the health insurance costs go down 33.6% year over year? This was posted by Michael J. Kramer 12 hours ago, and this was the catalyst that came out actually on December of 2022. And there was an economist specifically from BLS. This was Jonathan Church, an economist at Bureau of Labor Statistics, which issues the CPI data. They are from the BLS. They issue the CPI data, and they basically mentioned that health insurance prices, now costs are poised to fall by 4% a month. 4% per month is what they're going to drop down to all the way through September. So September of 2023 is what they were talking about, and this was in 2022. So health insurance is helping cool inflation, but it's not a very good reflection of what people pay. And the reason for this was because it was very difficult for them to calculate. It was incredibly difficult for them to calculate insurance premiums. And as a result, what people are actually paying for insurance premiums is so far different than what they're calculating it to be. So they pretty much included a 4% decline in insurance premiums all the way through September. And they mentioned the deflationary dynamic may not square with consumers' actual financial experience with health premiums. That decline in prices on paper is due to the unique way in which BLS calculates health insurance inflation. And quote, it's not a very good reflection of prices consumers are going to be seeing, is also what Andrew Hunter said. And that seasonality, or that adjustment you can call it, is coming to an end fairly soon after September. And starting October, it's actually going to be on its way back higher. So health insurance, you can see 33.6% decline. This is perhaps the biggest decline on a year-over-year basis next to gasoline and energy prices. And again, every single month it's dropped down by 3.6, 3.6, 4.1. So on average, it's dropped by about 4% per month. September's here. So starting October, and this is another article or that report posted by Wall Street that mentioned this, right? They mentioned the core CPI, which attempts to track underlying inflation by excluding volatile food and energy products, rose by a still hot 4.3% in August compared to a year ago. And given the narrower focus of core CPI, because it doesn't include energy and food, and therefore the proportionally bigger weight of the health insurance in it, core CPI was even more distorted than the overall CPI by 33.6% collapse of the health insurance CPI. So what they're really saying is that even though we're seeing a narrower focus in core CPI because it doesn't include food and energy, right? It's even more distorted because health insurance makes up a bigger piece of the overall puzzle with respect to core CPI. And since the health insurance is not adjusted well, it is possible that this decline in core CPI is not really the true decline. And I'm sure if I ask you guys, have you actually witnessed a 50 to 60% decline in prices for everything that you're paying? Most of you are going to say probably not, right? I mean, there's no way that in the real world, in the real economy, we've seen declines of actual prices coming down 40, 50%, right? Gasoline's probably the same as what it was last year, which I'll get to in just a minute. Premiums are higher, shelter prices rents are higher, if not moderating a little bit, but they are not down by any means. And this right here, core CPI month over month was held down by the collapse of the health insurance CPI, and yet it's still accelerated by 0.28%, meaning health insurance, even though it was down 33.6% year over year, core CPI was still up 0.28 to 0.3% on a month over month basis. So imagine what would happen if health insurance starts to reaccelerate back up, which obviously is going to cause a little bit of a problem. So, but on a month over month basis, gasoline prices have been surging all year, and they jumped 10.6% in August. So now we're gonna switch gears to gas and energy prices, thereby whittling away at the year-end plunge as we went in August. Gasoline prices still down 3.3%, but this right here is the change in gasoline prices. So we are back up to that same level from August of 22. And I showed you guys the chart in one of my other videos, or I think in a live stream, where energy wasn't deflation for the most part, and now it's going to actually be in a positive inflation territory once again in the next couple months if energy prices continue to go higher and they stay at these levels. Given how gasoline CPI plunged in late 2022, we know that on a year-over-year basis, gasoline CPI will turn sharply positive later this year, and the green line of the chart connects August 23 to August 22. And finally, the collapse of the health insurance CPI. So monthly adjustments to the health insurance CPI, which started with the October CPI last year, will swing the other way in October CPI of this year to be released in November. And the adjustment pushed down the health insurance CPI every month on a month-over-month basis by 3.4 to 4.3%, as I showed you guys earlier, which has now caused the year-over-year health insurance CPI to collapse by 33.6%, despite maddening price increases of health insurance in the real world. And of course, it's ridiculous because that's what they are, and they're one of the worst data distortions that came out of the pandemic as well. And Morgan Stanley also mentioned with regards to the oil prices and gas prices, a 10% increase in oil prices adds to 35 basis points or 0.35% headline CPI for 3 months, but just a 3 basis points to core. Higher energy prices must be sustained for some time to have a greater, more durable effect. The Federal Reserve will look through this shock. So this is where we end this video, and the bottom line is health insurance premiums and energy prices, and of course shelter. These are the three things that are really going to dictate where inflation goes. In October, right? So once September CPI comes out in October, we're going to see the last month of health insurance premiums decline. And starting October, which comes out in November, we're going to see health insurance premiums start to reaccelerate. Not to mention if energy prices continue to be elevated at these levels or even get up to that triple-digit number at over $100 a barrel, it's going to cause problems directly, indirectly for almost all products and services in the economy in the US, because everything is transported on the back of energy prices, right? And without energy, nothing really operates, right? Nothing works. So even if we exclude for energy prices from core, it is going to have an indirect impact on other items, and not to mention the medical care, the health insurance stuff that I just mentioned earlier. And shelter prices, if they are not coming down, if they don't come down fast enough to compensate for the reacceleration in gas and health insurance, then of course it's going to be a bit of a problem to a more persistent inflation situation where the Fed will have to deal with eventually. But nonetheless, I mean, markets continue to be very, very strong here. So if you come over to S&P 500, we're still very much green, up over 41 basis points, and Nasdaq's opening higher, 27 basis points. And of course, we got the Dow Jones up over 0.5% as well, with the yields slightly up over 4.25% right now, so more or less flat. So markets are still very much forward-looking and excited to the idea the Federal Reserve is done, no more rate hikes incoming, and the rate cuts in 2024. But of course, time will tell if that is actually going to happen or not. But let me know in the comment section down below, what do you think? As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Happy investing, and I'll see you all in the next video.